Welcome back. We are now in the final chapter of this whole program, Portfolio Management. This is the part where I'll put all that you have learned together and so that you can actually see the whole investment process or the full picture. Let's talk about the stock selection first. Okay, so of course, step one, before you can do anything, you have to select the stocks. Hope you can remember these are the steps to actually select stocks. We have to create this thing, what we call the watch list first. Okay, so most important, just a quick recap, what you have to do to select stocks. Number one, we have to actually look at the business. Okay, and of course, for the business part, what is most important is it's actually suitable to you, not the price. So at this point in time, don't talk about the price first. Just look at the business. Which business you actually think that it's actually going to do well? Which business is actually going to give you a steady income? So of course, after you select the stocks, you categorize them into these few categories. Most importantly, growth stocks or income stocks. And of course, if you actually look at things like REITs, ETF, you can actually put them in this watch list as well. So these are the stocks in your radar screen. Of course, haven't bought yet. Next step in stock selection, financial statement analysis. Hope you can still remember. So of course, we have to go through the ratios like profitability, liquidity, solvency ratios, reading a chairman's statement, and of course, review of the past 5 years data, and to make sure they pass the 6 financial ratio tests. Hope you can still remember. So of course, in that case, you'll be filtering down, the stocks you have chosen, okay, to even lesser amount, and you're more focused on what you should be investing on. So now for the portfolio management part, it's actually a lot about strategies, about timing. So when to buy, when to sell. So this is where I will address this question here, which of course I'm quite sure most of you are interested to know how to do it. We talk about the general principle of buying first. So when we talk about buying, it's always about buy and hold for long term. Okay, so don't forget the title of this program, create a secondary income stream through a long-term share investing. So this is the mindset you should definitely have. Okay, and we actually, so why is it long-term? It's actually because investing in shares and business is the same. Correct? If let's say you invest in a restaurant, it can't be like, after you put money in today, 3 days later you want it back. No. And what maybe a long term, again, just to recap, 3 to 5 years. So this is the mindset you should have. Every time I buy a stock, I'm prepared to invest for 3 to 5 years. So next, you have to understand, when we actually buy stock, we cannot just based on stock. We also have to watch the whole economic environment. Okay, I think the previous chapter we talked about this. And after which, we have to decide, is this the time for aggressive investment? Whereby, put it simply, it's like, if I had $100, I invest at least $70. Or is this the time for cautious investment whereby, if I have $100, I should only invest maybe 30, maybe 50? Or is this a time for divestment? So how we make this decision is really based on what you think about the economy condition. Another very important principle for buying, diversify. And what we mean by diversifying, over different counters, at least 30 stocks. Okay? And across different times. So these 30 stocks, it probably can take you 1 to 2 years to accumulate. This is what I mean by diversification, over different counters, over different time. Let's spend some time to talk about watching the economic climate or decide what investment mode you should be in. Take a look at the slides in front of you. Assuming at this point, do you think that the market is actually going to go up or come down? Of course, this will actually depend a lot on the economic climate, but regardless, you have to make a decision. So if you ask me, probably at this juncture whereby, it's not at the bottom, it's not at the top, probably one way you have to do is actually go into a cautious investment, whereby what you'll be doing is buying in phases. You probably kept your total investment about 50% of your investable assets. Like what I said earlier, okay, if let's say $100, probably at this point in time, to be safe, you only want to invest maximum of $50. $70 max, depend on how good you think the economy is actually going to progress. And of course, at this stage, you may actually want to be more selective. You may only want to buy undervalued stocks. So for stocks that are at fair value, maybe you want to think a bit more, but of course only focus on stocks that are undervalued. So this is what I mean by your investment mode and how you decide how much to buy, when to buy. Of course, some people may say that, hey, since we are not at the lowest, why don't we wait for lowest then invest? Don't invest now. Okay, so that is a wrong thinking. Why? Because there is never a best time for investment. History has shown that, when let's say we are at the bottom, at the point in time, people are very pessimistic. People will be thinking, oh, now we're at the bottom, we actually go down even further. Okay, so it's actually very tough to say that let's catch the bottom. It's almost impossible, and there's actually no science to help you to catch the bottom as far as I know. Of course, at this point, let's say, not high, not low, what should be your preference of stock? Should I invest in growth stocks or income stock? What will be a better stocks to hold at this point in time? If you ask me, of course, it should be income stocks. Okay, so when you feel that, market is probably, going on the sideways, it's not very clear whether market going up or down. So definitely buy income stocks is a lot safer. So in the event that if you are wrong, the stocks go down instead, well, at least you get compensated, your holding costs get compensated by the dividends from income stocks. So generally speaking, growth stocks are better when you're more confirmed of a bull run, you think the market is going up. So growth stocks are definitely a better option. But if you think that the market is going sideways or you're not sure, hey, the market, there's a chance that it will go down, income stocks definitely manages your risk better. So hope you actually see the picture, different point in time, different kind of stocks, when to go in, how much to go in. Hopefully this will actually give you some guidelines. So let's push on a bit more. So of course, at this point in time when the market is lower, this is where I'll actually go into aggressive investment. $100, I invest $100. $1,000, I invest $100. Okay, of course, I don't just base it on the chart. It's really based it on the economic climate. That means I'm actually quite confident that the market is bullish. Okay, quite confident the market is going up rather than just seeing, okay, it's actually at its bottom. So how do we actually know we are there? These are some indicators to help, like for example, after a prolonged downtrend, and you see the uptrend sustainable over 1 to 2 months, index trading near previous low. And like I said, the third point is the one that I actually focus the most. There's no cynical bad news. Or you can see that good news coming is actually going to push the stock market up. And the other indicator I use quite a bit is looking at the market PE. Okay, every stock market has its PE. I believe I talked about this before. And let's say when the PE is low, generally speaking, when PE is below 10, I see as low. Okay, regardless of which stock market you're looking at. And of course, when you're low PE, I will actually have the confidence to actually buy more, to a certain extent, go into aggressive investment mode. So some actually have this thought, hey, since the market is low, shall I actually do things like margin trading or basically borrow money for investment? Again, this is not advisable, especially if you practice my strategy. Okay, my strategy is always about long-term investment. I'm not here trying to make short-term gain at higher risk. So no. To me, there's never a guarantee that this is the lowest point. So it's very risky to borrow money just for investment. So my strategy, I definitely don't advocate borrowing money or margin trading.